Thanks for joining David, Kevin, Alex, and myself for the market update for the month of June. After 9 straight positive months on the S&P 500, we had a little bit more volatility. Some of that obviously dealing with oil, a little bit more dealing with SpaceX. But overall, it was a relatively flattish month for the markets. The U.S. stock market, measured by the S&P 500, was down 1.06. The Canadian stock market, as measured by the S&P TSX index, was down roughly 0.7%. And Europe-Asia stock markets, as measured by the MSCI EAFE, was up 2.4%. I'm going to pass you over to the guys, and they're going to do a little bit more of a deeper dive into what happened. But as always, if you have questions, if you want to review anything, please don't hesitate to give any of us a call here. Hope you and your family are doing well. Take care.
Thanks, Harry. The real storyline here was actually the divergence within the market. As Harry mentioned, the S&P 500 was off slightly on the month. However, the Dow Jones index was positive almost 2% on the month, as investors rotated into steadier value names and smaller companies continued their strong year. It was actually larger tech names that drove the volatility throughout the month, which leads us into what was actually the biggest storyline in June, which was the SpaceX IPO. We previewed it last month and it did not disappoint. Going public on June 12th, the stock jumped 19% on day one and closed with a market value above $2 trillion, making it the largest IPO in history and on paper, making Elon Musk the world's first trillionaire. But as we look past just that first day, we see that because only a small slice of the company was actually tradable, the stock was extremely volatile. Peaking mid-month at just above $225, it then fell to around $155 by the end of the month. Now this 30% swing in a matter of weeks is exactly why we always remain so cautious when trying to chase hype, as a single, albeit exciting storyline does not constitute an investment strategy. The second major storyline this month was the US Fed and interest rates. Heading into the month of June, most investors were expecting rate cuts this year. But in his first meeting as Fed chair, Kevin Warsh had a much more cautious tone and held interest rates steady. This caused the markets to reprice to no rate cuts in 2026. Now the main reason for this, yet again, is inflation, which remains sticky and in the US ticked above 4% for the first time in 3 years.
Thanks, Kevin. So now let's take a look at two storylines that caused the markets a little bit of rattling this month, as well as some good news closer to home. So first of all, let's take a look at the Middle East. Tensions with Iran continue to flare up around the Strait of Hormuz, which is a critical shipping lane that carries the world's oil, like we've mentioned in previous videos. Iran briefly closed its portion of the strait this month, or last month, and oil prices spiked as well as we saw equities sell off. Then moving into the mid-month, we saw that there was news around a potential resolution to this conflict and a full opening of the strait. Now, later on in June, we saw these talks begin to deteriorate a little bit more, and we still really don't have a solid outcome on the Strait of Hormuz. This leads to uncertainty, and as we know, markets don't like uncertainty. So going forward, this is going to be something that we continue to monitor closely here. The second story was in regards to technology. So in the last week of June, we saw quite a sharp sell-off around technology names that started out in the semiconductors and the chips and the memory producers in Asia, and eventually ended up spreading to some of those large US technology names. For a few days, it was looking, a little bit worrying, but the markets did end up rebounding to close off the month, and tech was actually the leader of that recovery. So a scary headline ended up turning into an ordinary correction and a pullback, and that whipsaw there really just captures the month of June. We saw things go down, but then to close off the month, everything was back up, and we ended the month basically flat. So now the good news here. Looking closer to home, and last month we had heard news that Canada was in a technical recession. This month that data improved quite a bit. The economy rebounded more than expected in April, and the estimates were continuing to suggest that the growth was going to continue throughout May, which it did. That eased a lot of the fears of a deeper-seated recession here in Canada. Now, the Bank of Canada is staying relatively flexible with this rather than committing to any set path with their interest rates. And the Canadian market has held up pretty well through all of that, supported by our banks, our resource companies, and all of the commodities that we have to offer here.
So to sum up, June was full of drama. We had a record IPO, a more cautious Fed, continued geopolitical worry, and a tech scare. But ultimately, the month ended in a very calm place, and markets are still positive on the year. This type of volatility within a month is not new. We've seen this a number of times over the past couple of years, and it's a continued reminder that staying diversified and remaining invested through volatility is still the best strategy at achieving your long-term goals. But if you have any questions about your portfolio, feel free to give Harry, David, Alex, or myself a call anytime.
Take care.